Yo, what's up guys? Welcome back to Trading with Emotions. We're going to kind of go over everything we've been talking about on stream. So this is the 62-day cycle. We have been tracking it pretty nicely. We are currently in the blue pattern. Okay, if you guys are familiar with the blue pattern, it is basically one of the most important patterns found in the cycle. There's heavy dark pool volume traded around this pattern. The way I like to show this on stream, on the green and red portion of the cycle, I would look at things on the macro, like meaning, the 4-hour chart or the daily chart. So I'm going to pull up the 4-hour here. There's a lot more volume being traded on these specific times of the cycle. So there's going to be more volatility involved. The way that we've seen AMC go up in the past, typically we do go up at the end or the beginning of the month. All right, so let's go on the 30-minute chart here. We're going to take a look at where we are in the setup, right? We're going to bring back the little parallel zone that we were in for a little while. And I did mention this on stream that we did have to respect the zone for the projector pattern to be in play, right? We're just sort of chilling out here. It's been 2 days. Here on the daily chart, we do have us crossing below the parallel zone, which is something we did not want to see. So I'm going to show you guys why this is important. We're going to go and take a look at the previous projector patterns that we've had in the past, all right? So here we're looking at November, all right? It's November right here. We have a trend line basically respected on every single projector pattern before we went up and shot up, right, to the moon. So here we have a nice trend line respecting the projector, okay, and we shoot up. Same with January. Projector, bounce off and shoot up. May 13th last year for the June run-up, same thing. Projector pattern, bounce down. Actually, this one kind of hovered over a little bit and then bounced, which is good. Now, the current projector, okay, and this is a conservative setup here because as you reach all-time highs, is what we want ultimately, there's going to be more volatility because the pattern is, well, it's taking longer to play out. So in between, there's going to be a lot more volatility, versus these smaller patterns. November 13 or November 2020, this projector pattern, took 2 days. January took about, 3-4 days. Okay, and then the projector pattern in May took about a week. All right, the current projector pattern has been playing out for a month. Okay, and this is something that we talked about on the March 29th scenario, that the projector pattern was going to be larger because, well, you're reaching new highs. Okay, and when that is the case, things are typically going to behave slower than they have in the past previously. Okay, now on this trend line, we did cross below. You can clearly see it. We're hovering below it. Now, there is still a possibility that we do go up in the near future, and it's not out of play. I want to make that very clear. It just makes it a little bit harder because if I go ahead and, really show you guys what I'm talking about here, we can hover over the projector pattern here on the same ratios and levels. So you can see right off the bat, if we start on support, the support trend line, we go to the highs. Here, you can see right that we cross below and that it's starting to play out inverse to what we want. Now, if we get a very quick shot up, next week, and we come back into the channel, since this projector is larger, okay, and there's more room for volatility, more room for error, then yes, there is a possibility that we come back into the channel, set up, and then go, right? Because there is a point of interest at the end of the month, and we know that. We've been tracking the point of interest. Now, if things break below, however, then we do have an extension in the cycle. I think that if we do cross below it, we are going to have to wait a good bit, I would say, until end of July going into August. That would be the first point of interest, and the next point of interest after that, guys, would be around September. And this is all taken off of the option expiration dates that we track here. It's taken off of the cycle. Okay, one of the most important things is the technicals that could play out. This is a time ticking bomb. When you cross this trend line here, this is literally it, guys. This trend line is very powerful once crossed. This is why we had a major drop here. We saw it happen back here. We saw it happen back here. Okay, what's likely to happen here in the short term is we do get a bounce, we might actually come back all the way up to this $25 area. And, you know, this might be the first test going into next week, right? If we do get that bounce back here, we come here, we get another test. What we would want to see is a breakthrough. At that point, this is a nasty, nasty ripple effect waiting to take place. However, if we go up and we bounce back from this $25 level to the, you know, to the downside, then that is going to be the confirmation here that we will get an extension in the cycle, and we will be trading sideways for quite a bit of time. Okay, so that would be the worst case scenario. Best case scenario is we touch this trend line here, this resistance trend line, and then we bounce, right? So I am going to show you guys the scenario here, the worst case scenario. I did come up with a setup that I've been working on here for a little while. So this is currently that scenario, all right? It's taken again from this major trend line that we have to cross. Basically what would happen is we would start coming up next week. We would hit that $25 level, try and test it one more time, and then basically at this point, if it got rejected, we would start a downtrend. And this would basically take us all the way back down very close to that short level here of $13, and then we would trade sideways from there. This is a time-ticking bomb. Remember, you do have a limited time because, well, at some point you're going to cross this line, right? Unless this thing gets shorted to a penny, which that is very, very unlikely with AMC. This is how you figure it out, guys. With the cycle, with everything going on, extend the trend line here. At some point, it's going to cross this line. I'm telling you, once it does, this thing is going to go and it's going to rip. And I said this too. If this plays out and if we do cross below and we get rejected here in the near future, there's a lot of people that are going to come in on this play. You get into single digits, that is a danger zone for these long institutions that are, you know, lending out the shares, because at that point you have to worry about, you know, retail going in on the stock. It's going to be massive FOMO, and this is going to kick off very quickly and be a nastier rip to the upside. That is going to be the scenario, guys, for the next couple of months. So this is a scenario for the week, okay? Let's say we start coming up, right? We start testing these levels of resistance slowly, right? We climb up, set up, and we break through on around the 29th, maybe even earlier. Okay, we hit that $25, $26 level. We get shorted back down. This is only if the cycle it gets extended, right? If this gets that clean breakthrough and we go back to 31, you know, back to that level, and we bounce back very quickly, then I would say the April scenario is still going to be in play, and we would go at that point, right? We just have to cross this resistance trend line. All right, guys, so that is going to be it here for this video, and I'll see you tomorrow on the live. You already know I'm here Monday through Friday, all right? Take it easy. Bye-bye. Love you. Trade.